Picture Wall Street in the early 1980s. Pinstripe suits, slick back hair, and enough bravado to fill an entire trading floor. And on the middle of all that, a guy named Michael Milken, quiet, rumpled, working out of a modest office at Drexel Burnham Lambert, starts pulling off something that no one saw coming. Now, he's not a trust fund kid or any kind of a head of a giant firm, but he's about to rewrite the rules of American finance. I'm John Hicks, and this is Fine Print, the forgotten footnotes of financial history. Now let's talk junk bonds. Back then, they were the punchline of Wall Street, and officially they're called high-yield bonds.
Jules, it's high-yield bonds.
Which is debt issued by companies with shaky credit. High risk, high interest, and honestly, most people thought investing in them was kind of like lighting your money on fire. But Milken looked at those bonds and saw something that no one else did.
Potential.
His strategy was simple, but radical at the time. Bundle enough junk bonds together and spread the risk across dozens of deals, and suddenly the odds start tipping in your favor. He used to say, in properly diversified portfolios, the risks of junk disappear. Now, he wasn't just talking, he was actually running the numbers and putting real money behind it. And that's where things really got interesting. Milken started helping investors buy up big public companies. Sometimes friendly, sometimes not friendly at all.
Make them an offer they can't refuse.
They weren't polite mergers with handshakes, they were hostile takeovers, fueled by mountains of debt. Suddenly, Fortune 500 companies like Revlon and Texaco and even MGM, they found themselves staring down buyout bids from groups of people that the CEOs had never even heard of.
The old guard, it took them years and years, and the new people on Wall Street, they want to do it in 2 days.
Boards raced to invent the poison pill provisions, which were essentially just clauses designed to make hostile takeovers as painful as possible for those that were trying to buy them out. That didn't slow down Milken. In 1986, Michael Milken personally made over $550 million, more than any person on Wall Street. But for a guy driving the most aggressive investment wave in decades, he kept a surprisingly low profile. He avoided the press and spent long hours with just spreadsheets instead of going to those highfalutin parties. But with that boom came unbelievable scrutiny. By the late 1980s, federal investigators were circling. Not every deal was above board. Insider trading, stock manipulation, questionable disclosures. And it all came to a head in 1989 when Milken was indicted on 98 counts of securities fraud, among other violations. Now, he pleaded guilty to 6 felonies and paid $600 million fine, which was the largest ever at that time. But he served nearly 2 years in prison. And Drexel Burnham Lambert, the firm that he made famous, filed for bankruptcy in 1990.
I declare bankruptcy!
It was the end of an era. But here's the twist. The playbook that Milken wrote didn't die with him. No, junk bonds went mainstream, and by the 1990s, mutual funds, pension funds, even 401ks were holding high-yield bonds as a regular part of their portfolios. The market that Milken had built, it turned into a trillion-dollar engine for American businesses. Companies still use those bonds to raise money today. They even fund buyouts and take big swings with other people's money.
Swing.
So why does it matter? Because every time you hear about a company taking on huge debt to buy out a rival, or you see headlines about billion-dollar private equity deals, you're seeing Milken's fingerprints. And if anyone ever corners you at a party and asks, what's the wildest hustle in financial history?
I have got a story for you.
You can tell them about Milken, the man who made Wall Street's trash turn into treasure and changed how business gets done in this country. Next week, we're rolling back the clock to the 1860s when Abraham Lincoln was so desperate to fund the Civil War that he created America's first national currency, backed by nothing more than nerve and a little green ink. Check out the videos on screen, like and subscribe. Now, I release a new episode every week, and if I ever happen to pull off a hostile takeover, you'll just end up with better stories. See you then.